All right, so we came into today. Where were we? We were about here. Let's just go to here. And we had that Wombo area drawn up, right? So this area, which was sort of the SMDR, I'm not wild about this movement, but I think given the velocity of the move that came from that low, I was fine drawing it like this. And we traded into it. We had our bounce off of the data movement. But what ended up happening was we had our lower time frame one come in here, right? So not like kind of there, but that would have been very, very challenging to get in on. I liked this here, right? So this was the first trade of the day, which broke the high, but then came immediately back in, right? So we liked that this gave it a little bit of a sweep, valid closure above, traded back down, that failed into the imbalance. We're pretty much good to go, and we're happy, but we're seeing major lethargic price action. We're expecting something violent off of the tap back in that then fails and should go. And instead we got range bound price action. Defending here, this is sort of multiple mitigations and whatnot too. Defending in here. But not going anywhere. So our expectation is higher prices pretty quick, and we're not getting that. So regardless of what we are getting, not getting that means we're likely going lower. So if we're going to go lower, we have two options. We're either going to sweep out this low, right? In which case we want to be looking sort of short on failure. People who are also longing on failure, I suppose, too. But our objective's lower. And then how we're delivering that's something else entirely. So what ends up going on is we eventually finally snap. Now, this was quite lovely. We had a 5-minute sweep, quite the dangerous wick, right? That's about, what, 30 points of a wick? Nasty business, right? And I can understand people not wanting to risk off of something here for the movement back up. I get it. You know, we've got many reasons of trading back into this range. And we usually look for those movements. And if we're wrong, then we get stopped out almost immediately. But what I was looking for was the absence of a higher time frame move. So we validated this low, we traded back in, and then left. And violently left. And now we're building an SNDR here. We're not shorting at all. Not shorting at all. We're looking for structure and higher time frame movement so we have something to risk off of for our Wombo combo. And if we're building an SNDR, now we're looking at that SNDR for trading into, trading into it later. Let's trade into it later, as we know SNDRs to want to do. Why? Because there was a ton of decisions that were made in here. Lots of volume, lots of pressure, which means the CME wants to trade back in there. The market's telling us that it's somewhere that people want to do business. Right? So when to get involved, you have this, which is very aggressive. You're taking some sort of follow through on it, which is also fine. We don't need to be in at the bottom. We don't need to, well, I mean, you don't really even need to be in on this move at all. If it's going to be a higher time frame direction, what are the chances we get a good trade later on? Pretty high. Pretty high. And we did. Right? So higher time frame direction, this SNDR led to higher prices. Not worried, and I mentioned this on stream, not worried about what it does in here. Why? Because our higher time frames are blasting. We just validated, or we just swept, failed, and we had a higher time frame direction. Right? So our objective is this high. When we're choosing objectives, we need to take into account what the order flow is that's delivering. if we've got a 1 minute movement that's coming in here, it's unlikely that we're going to take this high. If we've got a 15 minute or higher order flow and failure, now we can start looking at objectives that are pertinent to that time frame, which we did. Away we went. All right, so we ran higher, we traded sideways in here, a little bit of lethargic PA. And there was a couple of trades in here that I wanted. Underneath this was a 5 minute imbalance, and I was waiting for that sweep to no avail. So we had this move. It actually came up here. We had a flat bottom candle. We had a second one. And one of the poor decisions that I made was going long off of that, which then got stopped out. Expecting if we're going to sweep and fail, we're going to continue to deliver higher. I thought this movement that then had a higher time frame move was ready to go. And instead, that loss, even though we were able to take this sweep and fail inside of this structural zone, expecting this protected low to hold, possibly getting their 5 minute imbalance there, but this failure tells us, again, internal failure usually tells us with these double bottoms that we're not willing to go lower just yet. And now we can analyze this lethargic movement. If it eventually breaks, we're going to trade back down, which is great. Otherwise, we would have just kind of ran up, and we had many reasons to run up, this high being one of them. Didn't get it. So instead, we traded higher. We're getting some aggressive movements lower. Here's our order flow, which got broken. Traded back in, left, right? And we grinded down right to our SNDR. So we've got many reasons to trade back down to here. This being a intermediate time frame range, we definitely want to be down in here. There's a lot of price action to be dealt with. And lethargic movement usually will fade back into it. For the same reason that people will be looking, or were looking, to be buyers down here to trade back into all this range. Now, again, internal failure, lower prices, and blasting lower we're going. Likely taking this low, and Asia will likely have something, maybe we'll fade up and then come down. But again, like sort of looking at this, if we're looking at this price movement and you logged on here, you're looking at this SNDR. You've got a ledge underneath it, so we want that liquidity taken underneath 71.75. We got that here, beautiful. You've got this area here that also aligns with it, also beautiful, right? And then how to get involved. So we've got 3 different time frames that we really look at. You've got your 1 minute for your entry. We don't really look at structure on the 1. We look at order flow on the 1 to determine what the 15-minute structure is doing. And that keeps us out of fake flips. The things we look at on the 1 minute are, we want valid lows put in. Valid lows put in, right? But order flow has also got to be paramount too. Right? Just because something's a valid low does not mean that it's going to go on a rocket ship. Depends on the context and the situation. Which sounds like a bit of an evasive answer. But if you've got a predominant area here and we fail, your early exit of any longs in here was this. Right? We wanted this high to break. That's our order flow high. It fails here. And this is where, if we're sitting on the 1 minute, we miss the important information that comes on the 5 and the 15. Your 15-minute time frame will give you bias. Right? If you're here and you're looking at your 15-minute time frame, are we bullish or bearish? Hopefully we're bullish. At worst, we're in a range, and that's kind of fair too. Swept underneath this one, swept above that one. Right? Yeah, we have an imbalance here, but as you guys know, I don't really take trades based off of imbalances unless we have a strong range with an imbalance sitting right below it. Now, going back to this, our 15-minute gives you your bias, your 5-minute gives you your major validations, right? And that's kind of where our multi-time frame analysis really shines. And I'll be honest, the 5 wasn't really something that I was watching much until recent months, because of how it synchronizes well with our Wombo combo, right? So in other words, if you're here, we're seeing no real reason in this for higher. No real reason at all. We've swept underneath, great, we've taken some liquidity, I love it. We got a bit of a move out of it as a result, I love that. Right? But we're getting nothing in here. Even that traded into this. That was what, a 25-point bounce? That alone? Right? But this would keep you out of trouble. Because when you're here, getting too eager, we need to see that sort of A+ idea of the sweep, the fail, trades down and then trades through, for the same reason that these candles, all of them, traded up, then traded through the candle itself and then closed here. Traded up, traded through the candle, closed here. Traded up, traded through the candle, closed there. On and on and on. That's how expansionary candles are formed. So what are the chances that if this one trades down, sweeps this candle inside of our area of interest, which is huge, inside of our Wombo combo area, which is also huge, and then it trades through this candle, you've now got candle range theory, which we are expecting at least to take this high. And you've got this area up here for your trade. Boom. And we're away. And now you've got multiple different reasons. Your entry time frame, we want a valid closure above this candle that took the liquidity. We got it. We got a failure in here, leading to expansion. So there's many different ways of getting involved. Some of you guys might wait for confirmation you're in here. That's cool. That entirely depends on what you're looking for. Right? Some of you guys might be very aggressive and you're willing to take those losses, but you're also likely getting in on this. I go break even, so I have a bit of a different sort of structure, but we're kind of very aligned in that I'm very aggressive and my win rate's a little bit lower as a result of taking a lot more trades. This manipulation is confirmed when we close above this candle. Right? But that's manipulation. So if you're involved, say you're involved at this open at 674, and your initial trade is 10 points, 10 point stop, right? And you're targeting this. So great risk reward, obviously. But again, I think risk reward's a poor stat to track because it doesn't encompass everything. Your initial stop's 10 points. You're in. This closes above here. We've now validated this as manipulation. If our trade is right and we go break even on the attempt to sell off that then fails, which is a little bit discretionary. But I need to see a genuine attempt to sell off. I didn't get that in here. This was your genuine attempt to sell off, and it's now trading higher, but we didn't validate that movement. So you've got two different ideas, right? We want this trade back down, ideally, to not validate a high. For the same reason that we couldn't validate a high in here at all. In fact, we didn't even get a bear bar, which is fine This one could have ended up being a bear bar. Who cares? As long as we don't validate it as a high. Yeah, this closure was deadly, and then this one was beautiful. This is an entry in itself. That's somewhere where I will add 9 out of 10 times. Right? So if you guys are trading small, or you're growing your accounts, or you're building micros, then I would recommend playing it safe, right? If you're involved somewhere in here, right? We don't want to take it here and then take a scalp. That's nonsense. We can't mix them both. If you're taking an aggressive trade here, then you're looking for signs to aggressively get out if you're wrong. Right? If you're taking a confirmation trade, then your stop is here, despite it rarely having it, if you're right, and you're holding, like, hold the target for once. Right? If you're aggressively trading, the benefit that you have is that on this and then the confirmation trade, because usually what you'll get is this movement will break, close above. Say this was your last structural bearish candle. We finally got that. And now we're looking at something to come back in, maybe something here. This is your adding opportunity. This is your adding opportunity. And then if you have something like this go on and you add, then your first take profit is there. And what that will do is it'll alleviate the emotional management that you're fighting while trying to watch the chart. Because that's the outcome. Right? We focus on the process to give ourselves desired outcome. And if you're emotionally sort of charged, looking at each and every tick, whatever, and having issues that way, that's where you are in your journey, that's fine. Everybody was there, believe me. And, but how you move past that is you're practicing very specific things. We love to practice, how do I attack? How do I get involved? How do I get in? You know, should I be in here? Should I be in here? Should I be in here? You know, maybe I got to get in here. And I'm terrified. Or whatever reason it is. There's nothing wrong with getting in here. If that's what you're backtesting and you're seeing. Right? But getting involved here and then taking it off here when we get our pullback, which happens, say, 60 or 70% of the time, that's nonsense too. You have to understand whereabouts you are. So you guys will all likely be you'll have the exact same trade or exact same ideas when you study the Wombo here, but you'll all have different journeys of how to manage and maintain that and have patience for waiting for the next one. Some of you guys might start out and you take that aggressive trade here. Maybe you take it here and it goes up and you're like, God damn it, that just took me out for like peanuts in here. And now I'm frustrated and I missed the big one. Well, how do I get around that? It's gaining understanding of what the market needs to do before it runs. Right? And that's fine. Like, celebrate where you guys are in your journey rather than beating yourself up for it. If you hit the button at all in here, hopefully you made money. But even if you didn't, you showed up. You had the right idea. Make sure if you didn't make money, you got your lessons worth out of it. This is an A+. This is an A+. Right? But our job as educators is to allow you guys the freedom and the education of making consistent decisions so that you nail it tomorrow. Because guess what? Many a time where I've been involved in this and I've added and then got stopped out and missed the big move. Many times. Long before the Wombo. Or God forbid, being short in here, I think that might have been a long, long time ago if I was ever like that. So lean on our experience in that way. Right? Consistency comes from consistent decision making, which comes from experience, which comes from bad decisions. That's how it works. I don't make the rules. But the fallacy is when we are making bad decisions, but we don't know where we're wrong. Or we're making good decisions and we don't know how to replicate it. The amount of times I see on Twitter, if I scroll for 5 minutes, people are like, more screen time. That'll make you profitable. You just need more screen time. That's false. That's wrong. That makes no sense to me. Exactly. What if you're practicing the wrong thing? You just need to learn how to drive backwards down the freeway. Well, that's not helpful. Just go juggle on a soccer field and you'll get to be a pro one day. No, that's false. We want to take the bad habits, both in you as a person using the psychology channel, and mitigate the bad ones, and install better habits to facilitate better decision making. And that works for both you psychologically, but also trading wise. Parts of your strategy, not one person on Twitter or in here otherwise has parts of their trading that aren't extremely good. Right? But even if you guys are backtesting, you got to be backtesting something specific with the goal of improving a specific part of your skill set. Maybe that'll be entries a few days a week. What is going on here? Nonsense. Nonsense. Right? So if you guys are studying at night, your job, before you even sit down to study, is determine what you want to study and what you want to improve on. Because guess what? The results you're getting are a direct representation of your skill set. If you don't like your results, then you have a little bit of introspection to look at what parts of your trading strategy or system or your ability to execute it are not serving you well. Right? If you're making a cake and you're adding beef, take the beef out. See what it looks like after. Stop shorting into strength when the trend is bullish. Stop doing that. You might end up being right eventually, but stop doing it. It's got to be some sort of earnings, man. It's 6:15 or 16:15 exactly. It's got to be something. What's on the earnings calendar? What do we got? Yeah, I don't know. Costco. No, nothing. Nothing really. I don't think. Let's see. No. Broadcom, Korea Electric. Liquidity services. There you are. Nothing's jumping out at me either. Anyway, I'll get off my soapbox. Does anybody have any questions for today? Or anything going on that you guys got me for? Awesome. My pleasure. It's my pleasure. Last thing as well, if you guys do, I'm going to make an announcement here in about 15 minutes regarding the referral program. It's going to be official today with the launch of our Module 1. I will be adding a range video to it either tonight or tomorrow. But we'll make a couple of announcements today for sure. Thanks for tuning in for sure to our community day. This is going to be the last one until the back testing on the 21st. We're not going to be streaming live next week. We actually should be alternating back and forth. Usually we do a free stream every week, and then the next week is a free back testing session with us. But we'll figure out something for Christmas as well. Anyways, congrats to you guys that were green. If you're not, then you've got some. Maybe this review will hopefully get a couple pieces together. And feel free to reach out to us with any questions, comments, concerns, or fun stuff. We'll see you guys tomorrow for some more fun. Have a good one, lads and ladies. Bye-bye.